Hello everybody, this is Will Hassel once again for my weekly Sunday watch list. And I'm gonna start off with a weekly review, as I always do, of the previous week. Gonna go and throw up the QQQ up here. We're gonna put that at a 5-minute 5-day. As we can see here, overall updates for the markets for these past for this past week started off pretty rough, pretty patchy. Then on Wednesday we had the Fed meeting. Well, not really the Fed meeting, but it was the Senate Banking Committee going and talking and questioning the soon-to-be Fed President, Janet Yellen, who is the current Fed Vice President. I asked her a series of questions. I was watching this press conference, and not a whole lot of interesting stuff other than what her thoughts on the current markets are, whether we are in a bubble or not in a bubble. A lot of people have been talking about that we are in a bubble. People have been saying no, we're not. Janet Yellen said the stock market and stocks are not in a bubble. Bonds were kind of in a bubble, and housing should probably start to get looked at a little bit. But overall, it was no bubble, she said, and that's what sent the markets higher. Really got some dovish comments on her that QE will continue for the foreseeable future, but we can expect a cutback to come. I don't think anyone really thought that QE wouldn't be cut back within this amount of time, especially after that great economic data we had last week. As you can see, QQQ closed above its 50-day moving average, pretty much. Blew past, opened a little bit slightly lower on Wednesday, and as we got started, and as the Senate Banking Committee questioned Yellen, blew past all of its simple moving averages, and 50-day has been acting as a little bit of a support, a little bit of a guideline. Got tested here Friday, but quickly rose above it, and it's way above its 200-day moving average. Only really started to get into it on that choppy Monday and Tuesday trading. Quickly go to the Dow Jones Industrial ETF. As you can see, the Wednesday rally coming into it, pretty much all the major indices were down below that 200-day moving average here, then the 50, and then eventually the 21-day. Going to the S&P, once again, basically same charts for all of them. Cleared above its 50-day moving average. Just going to recheck the Dow. Yep, it closed above its 50-day moving average, and they all seem to have closed above their 21-day moving average as well. So that's your week-end review. I'm going to move on into what I think will move next week, economic data-wise. We have on Wednesday October CPI index, which I will be looking at very closely. The consensus estimate is 0.1% growth, and as opposed to last period, we got 0.2% growth. October retail sales, which I'll be looking very closely at because, as you all may or may not know, I am long Michael Kors, and I will also be talking about a opportunity I'm seeing in a particular stock for this next week that ties in very closely to this retail sales number. And the retail sales number for October, the consensus is 0.1% growth. Last period we actually had a down of 0.1%. And then we have those are all on Wednesday. On Thursday we have October PPI number, which the consensus estimate is down 0.3% as opposed to a down 0.1% last period. Some things to expect in this next week. We have a number of the Fed presidents really kind of doing into meetings, slideshows, stuff like that, giving speeches. The one to really look at seems to be on Thursday, and that's the Philly Fed. We're going to see the Philly Fed index numbers, it seems, and really it's going to be seeing if Fed President Pulser, if I'm saying that right, who's normally been hawkish, they're saying that this decline in the Philly Fed Index will possibly make him a little bit more dovish, which would be very interesting because normally he's been a very hawkish Fed president. So that's one to look at. And then the Bank of Japan on Thursday is seen standing pat on monetary policy despite a third quarter slowdown in growth. Officials could address that the ECB cut rates and that Janet Yellen's remarks. Kleintop says the yen could weaken more. This is all, I'm reading this off of my Barron's that I have here. So basically, gonna be seeing Bank of Japan meeting. They're gonna be talking about their monetary policy. Shouldn't affect the U.S. markets too big unless they really come out and do something crazy, like, I don't know, surprise rate cut like we saw last week in the ECB. But other than that, everything should be fine there. I'm expecting little to no movement. They're going to keep buying assets. Monetary policy is going to remain the way it has been for as long as I have been studying the Japanese markets and the situation over there. Now back to that stock that I was talking about that could be a potential move for this next week with that retail sales number, and that is Nordstrom's, a company that I like. And as we see here on that last week, Wednesday we had that general move, and then it went down because on Thursday it released earnings after the bell, which you can see is that downturn right here down to that 62.80 close. It's down about 1% that day on slightly higher volume. I'm looking at about 3 million shares as opposed to a 2 million share 10-day average, 10-day volume average. Now, Nordstrom's reported third quarter earnings of 69 cents a share, which was in line with the estimates that were given. Yeah, it was just 3 cents above the consensus, but the thing that really got them is they were down on revenue, and they missed last year's third quarter results by 2.8%. That's the stock down, as we can see, about 1%. Really had a sharp move after hours, opened a little bit higher. Below its 200-day, tried to get up there above its 50-day moving average because it had that little rally right there. I say get into this play because really Nordstrom's showed that retail is still here. They were a little light on their revenue because they cited that they had one of their massive yearly sales before this quarter's earnings, and not normally it happens, I think, end of fourth quarter, or like right between fourth and the first quarter of the new year. I say get into it because I'm expecting this next quarter's earnings to be pretty big, and looking at what the consensus is. The consensus is $1.35 for Q4 earnings, which, I mean, $1.35 earnings compared to the 69-cent earnings right now. That's just what's projected, and I mean, I'll keep you guys informed if that changes as this stock goes on. But I see this as a multi-month play to a multi-week play. Mainly because, you know, it posted earnings that basically said retail is still here. I mean, Nordstrom's itself may not have, you know, that super strong, you know, revenue, just because, you know, the wholesale thing, but it's still here. It's still meeting in line with earnings in a time where some people have been questioning retail. I mean, we had Macy's numbers beat. We had some other retailers' numbers who didn't. You know, Michael Kors, which I have been long in and absolutely love, they actually sell some of their merchandise at Nordstrom's. I mean, Nordstrom's is a higher end play for the retail market, but you think about we're about to go into Thanksgiving and then Christmas. I know my family, we go to Nordstrom's typically around after Christmas to go holiday shopping, because normally they have a whole bunch of stuff on sale. Normally we see a lot of people at those malls at Nordstrom's. So that's another thing to think about, is they posted a little bit weak third quarter earnings. I mean, just weak on the revenue side, but you're looking at this huge quarter for them for this next quarter, because it's the entire quarter of the holiday season, where people are going to be buying all sorts of things, and you're going to get people buying after Christmas, Black Friday. It's just I think it's really gonna be a good quarter for Nordstrom's, and with the stock being down here at 62, being bumped down because of those earnings, I think it's a great place to go and get in. If we let's look 10 days. It's gone up quite a bit, but I don't really see a whole problem of owning it right here. It took a beating because of that earnings miss, but I don't really see that becoming too much of a problem, in all honesty. So far, great performance on that 20-day. We've gotten a $4 gain. Not too bad, but oops, my apologies. Like I've been saying, I think it's going to be a good play on retail, especially since I think we're going to see a lot better out of retail than most people are anticipating. Just looking at this fourth quarter earnings for Nordstrom's, and it's pretty much double what their earnings per share was supposed to be this week. Typically, fourth quarter sales for Nordstrom's are higher. Last year's third quarter earnings for Nordstrom's was 71 cents a share, and that was within consensus, but their fourth quarter earnings were $1.40 a share, and that was just about within consensus. So you get that massive earnings per share there, which will send the stock higher. So I can definitely see this within the next coming months, probably by the end of this month, maybe at 65, and that's being a little bit of aggressive. It may have a choppy trading week this week, just because of people still digesting those earnings. And then I think if we see the retail sales number come into where it is, or if we even get a beat there, I think you'll definitely see this stock going higher, and Michael Kors. So that is your stock suggestion of the week. That's my stock play that I would probably go and do if I wasn't already in a retailer. And that retailer is Michael Kors, which had as we are going to examine them. Had a fairly strong week as it came off of those earnings from last week. Hit that new 52-week high. Just an overall strong week. Closed way above the 50-day moving average to get right on the line with that new, which will be resistance of the 82.73 line. That's its new 52-week high, so that's going to offer as resistance right there. As you can see, a lot of buying really went on Wednesday. Really didn't affect it, which is pretty good. When you think about it, if the Fed going and saying, Janet Yellen going and saying that this isn't a bubble, that they weren't really affected either way, because as you can see, they opened up and they stayed up. They've pretty much, ever since getting to that new 52-week high up here, been trading in a pretty strong range. I just went a little bit below the 200-day moving average right here on Thursday, but that's about it. Closed the week's pretty strong, so we're going to minimize that chart. AIG had a surprisingly good week, which I was very proud of. As you know, I'm long this. They got smoked in earnings. Huge up day on Wednesday based off that whole Fed bubble talk. And it did cross that $49 line that I was talking about that offered as its resistance. And it crossed it on Thursday, and look what happened. It closed way higher, 33 cents higher on that support line. And just look at the 21-day moving average, just painting that, and the 50-day, it's just strong uptrend right here, closed just below that 50-day moving average and the 21-day moving average, but it's a strong uptrend. I mean, just look at that 200-day moving average curve. We are above that 49 level. So that 49 level that was resistance is now your new level of support for AIG. And as long as it stays above that 49 level for this next couple trading days, I think it'll go higher. It looks like our new resistance level is about 49.60. So just going to see it in that little bit of a trading range right there probably until we get a little bit higher momentum. We see that momentum carry on into this next week that I had on Thursday, Friday. You'll definitely see it start to break $50, and that's what I'm definitely looking for. Oops, got trade. And then we're going to move into Starbucks, which had some interesting news over this last week. And it was on Wednesday after the Fed meeting, as you can... no, I'm sorry, not after the Fed meeting. Was it Tuesday? Oh, let me go and check this real quick. It says right here that news was that Starbucks must pay Kraft Foods a paltry sum of $2.76 billion because of because Starbucks actually got out of a marketing deal with them. My apologies. And it was supposed to go in, supposed to drop the stock off, but it ended up doing it, and that news report did come out on Wednesday, so that's when I saw the huge close downward. It was about a 1.5% drop, and then it quickly rebounded because people realized it's Starbucks. Their earnings probably won't get that much affected by it. They've got plenty of cash on hand. Tivana stores are rolling out. That's going to generate a huge new source of revenue, and the quarter will be fine. This $2.73 billion sum that they have to pay won't be that big of a deal. So, a lot of people that probably got in because it went under that $80 range just went, okay, let's lock and load here, and they made it closed up at $81.50, so not a bad little gain there. Closed up strong, didn't make those new highs that I hoped it would, but closed above its 200-day, closed up all the major simple moving averages. Looks like that $80.80 line is key support level right here, as we see it touchdown here. It's gonna be and that's right at that 200-day moving average right there. So that'll be a channel to go and watch. JP Morgan, they really didn't have too much news come out other than the whole Fed, which lifted its day up, had a pretty strong close. Glad to see it coming back up close to 55. Basically 94.40.96. I'm sorry. Looks to be your resistance line because it touched up against there twice on Friday. Well, probably a little bit more than twice if you count all that stuff. Closed slightly above its 50 and 21-day. I've been saying buy this thing down at the $50 range during all of its litigations because it's still a strong bank, crackerjack management team. I've mentioned this in several of my both videos and blog posts that I put on my website before I did my videos. It would have been a great buy down there. I said buy it down there, and look, it's already up at 54. And I was saying buy it, at 52. The stock of the week, Fannie Mae. Oh boy, oh boy, oh boy. Quick note here, I did have a position change in Fannie Mae. I sold 20 shares. As you see, I have 80 shares now with a profit of 33%. AIG, my only lagger of me down, just a little bit under 3%. But here, just look at this chart as we see choppiness all along there. And then on Wednesday, oh boy, with that Fed meeting, it just spiked. And I sold some right here. I sold those 20 shares. Not even there. I sold them right here. $88.55. Sold them right there because I just want to get some quick profits out. And it started to reach over my 25% exposure limit for one stock. So got out of there like the nice little profit. Just went up. And then Thursday on the opening. Oh my god. Oh my god. It spiked so high, I probably should have sold some more when it was up that high. Took out half my position. I really should have, because Fairhorn Capital, it offered the government a $52 billion recapitalization to buy Fannie and Freddie out. I believe it was the insurance part of Fannie and Freddie out from the government. The government hasn't denied or hasn't confirmed or denied it yet whether they want to do it or not. And then after that, the common shares rip. I'll show you those in a couple seconds, because that's where I think a big part of the play here in Fannie Mae will happen. Is now the commons, because they've been performing really fantastically. They've pretty much doubled in the last couple months. And a big note there, Bill Ackman bought a 10% stake in each Fannie and Freddie on the common shares. Now Fairhorn does own a lot of the preferred. Instead of the common, they do own common, but mainly preferred. The technicals right here, all the moving averages don't even really matter. And I hate to say that, because you see the 200-day acted as a level of resistance right there, but they don't really matter right now, because it's about to go in such a high flying momentum. You saw a ton of profit taking here, and that's what took it down, because when we look at the Fannie Mae commons, we see on that same day, Thursday, just kept going up. It's kind of ironic that it finished up on the highs, but Fannie Mae finished on the lows. And then, I mean, you just look at this, it started out the week $1 shorter. I mean, $1 smaller, and this just kills me. It really, really does. You know, I asked my friend Ben to look at the technicals. He said, Ben C. Banks, definitely go check out his blog. Does a great video every week about his setup Saturdays, setup Sundays. He's a really good technical analysis, also a leaders member. But you just basically, if you want to play Fannie Mae, I'd say get some of the commons. That's probably what I'm gonna do. Wait for a big pullback and buy some commons. Kind of liquidate, probably a little bit more than half of my preferreds. Still keep those preferreds on though, just so I can still stay in the game. I'm not really sure. I have so much profit in them right now. I'm not. It's really a big confrontation for me right now. And I'm kind of stressing out a little bit what to do. Probably gonna sell some and then buy some of the common shares, just so I can get a lot of 100 or something like that. That's the way I'd play it. Probably through the commons, but it's smart to own both the commons and the preferreds. And I think that's the way I'm gonna end it. Thank you everyone for watching my videos, for following me on Twitter, for going on to my blog. You know, I love getting questions. Love this week that I got some questions on Twitter about some of my different strategies, different longs, what I thought of certain stocks. I love questions. Please send them in. You can go and check out my email on my About Me. You can go on my Twitter handle. That's really what I suggest if you want to keep up with all the moves that I make, because that Wednesday morning I was live tweeting me selling Fannie Mae. So I would advise following me on Twitter if you really want to keep those live up to date. Those real-time alerts, I even did the hashtag real-time alert. Shout out to Keith McAuliffe because he does that, so I kind of copy it. But that's what I would suggest, to go and follow all the real-time alerts for me. 25 minutes. I'm gonna wrap this up. So thank you all for following me on Twitter, for watching all my videos, and for supporting me. Please go check out all my other friends over at the Leaders Investment Club. You can go check us out at leadersinvestmentclub.com. We were a whole bunch of the guys that were featured in the Business Insider article. You can go and find all their articles there. So thank you everyone for watching.